Well, now, Mish, you've had a great record even in downturns. How do you suggest that investors make money now? Because we've got more fear, particularly with the individual investor, than I've seen in my trading career. How do we make money in this market?
How do we make money in this market? Well, it's funny. I told people for the last couple of years they should be raising cash, they should be paying down debt, and people looked at me like I was nuts. They said, well, cash is trash. We need to be doing all these things. There was a mad rush into commodities last summer, just a blow off top. There was no way that oil could support sustained prices at $140. There's no way. And so, well, if there's no way, then it's not going to stay up there. And it didn't. Prices came down to $35, $40 a barrel now. And I don't think they're going to go blasting higher. Everyone looks at this United States, well, we're printing all this money, commodity prices are going to go shoot back up, the dollar's going to go to hell. You have to look at what the world is doing. The European banks are arguably in as bad a shape as the U.S. banks. The European banks lent $4.7 trillion. That is a lot of money to the Baltic states and Latin America. That was at least something the U.S. banks didn't do. The European banks are more in hock to loans that they've made to produce some productive capacity over there. That debt can't be serviced. Nokia, a lot of the foreign companies, the phone companies, the construction companies overseas are more in debt than their U.S. counterparts. So that's another thing that's good for the U.S. dollar. So you got all of these global imbalances that have finally come to a head. And there are no real solutions. People keep asking me, what's the solution? Well, that's the economy. Now, what about the stock market? When it comes to the stock market, it's very possible that the United States does something very similar to what Japan did for all the economic reasons that I just mentioned. In other words, the Japanese stock market is way below where it was 20 years ago, monstrously below where it was 20 years. The same thing can happen here in the United States. Not only can it, but it probably should. If one looks at the earnings of the S&P 500 right now, the PE ratio of the average stock is something like 29. That's how fast the earnings have fallen. If for the price to drop to the same level, well, we might see something like, and the earnings start to recover a bit, we might see something like 400 on the S&P. But does this mean it's a good time for people to go out there and short? Not necessarily. It's very tough to advise people to go out there and short, because remember, we've fallen all the way from 1475, 1500 area, all the way down to 800 and change right now. That's a lot that's taken off. So good shorts are getting harder and harder to come by. So, the way people are going to make money in this market now is they're going to have to time their entries a little bit better. They're going to have to be willing to settle for half a loaf. They're going to have to stay on the sidelines and protect their assets. And capital preservation, even still, is more important than trying to make trading profits in this environment. It can be done, but only for the very nimble. And, we have our broader-based strategies at Sitka Pacific. We had a very good year last year, plus 13.7% thereabouts in hedged growth, and plus 6.9% in absolute return. And we did that by picking the times that we wanted to go long, and the rest of the time we were market neutral in hedged growth. We had a third cash, a third short, a third long, and all we wanted to do was pick good longs versus good shorts on a relative basis, and that's what we did. Those are the kinds of strategies, not the asset allocation strategies that we've seen in the past are going to work going forward. Let's talk briefly just about those asset allocation strategies. You called up your average broker, and he would tell you to buy some mid caps, buy some small caps, buy some emerging markets, buy China, buy some commodities, and buy some junk bonds, and then you're diversified for anything. Well, no. Every one of those asset classes got smashed. from 2002 through 2007, thereabouts, all of those asset classes were rising in union. So everyone thought they were a genius. Oh, look, I'm diversified. I'm making X percent here and Y percent here and Z percent here. And the thing is, they were making X, Y, and Z. When the market switched the other way, they were losing X times 2 and Y times 2 and Z times 2. Had stock portfolios 7, 6, 7, 8 years worth of gain sometimes taken back in just a matter of a few short months. And those earnings aren't coming back for the reasons that I said.
Well, one of the things I wanted to talk to you about, too, is, we started our show because you hear so much garbage in the mainstream media. And one of the things that's been obviously prevalent has been government's printing money, we're going to see inflation, dollar's going to get destroyed. So the link there in the minds of the individual investor has been weak dollar is bad. And we've heard people like Larry Kudlow saying we need king dollar, My argument has been that over the short run, right now, the strong dollar is bad.
Well, I wouldn't say that a strong dollar is bad. I would say that a strong dollar is good. What you're trying to do is balance the exports to the imports, but it doesn't really work that way. It's a strong currency, I think, is a good thing to have. It certainly buys more goods. Look at it this way. You weaken the dollar and you raise the price of gas. When people are out of work here, what can they afford? The strengthening dollar and the falling commodity prices have actually been good. It's one of the blessings, actually, of the recession that we're in, of the deflation that we're in right now. Imagine if oil prices were going the other way and the dollar was falling and food prices were soaring. Imagine what that would do to people out of a job. At least now they get the benefit of falling prices. I say a strong dollar is a very good thing, and that's how I'm looking at it. And if the U.S. government would institute some policies that made sense, the U.S. dollar would get stronger. Let's, bring the troops home from Europe. What do those troops need? What do we need to be wasting money in Iraq for? What do we need to be wasting money in having troops in Europe? If Europe wants us to have troops over there, why don't they pay us to have troops over there? Instead of those soldiers spending their dollars in Europe, you can protect our borders here. At least they would be spending money in the United States. So, there's a lot of policies that we have that are just completely misguided. We can no longer afford to be the world's policeman. If what we really need to do is actually just absolutely slash the spending where we can. And one of the places we can slash it is military spending. Bring those troops home, protect our own borders here, stop spending a lot of wasteful programs. Yeah, that's going to put some more people out of jobs, but the U.S. dollar is going to go soaring. The prices that we see here would come tumbling down. That's what needs to happen over the long haul. You just can't look at these things, and everyone wants the quick fix. Everyone wants what can we do to create jobs? What can we do to get out of this? The mess is so deep that the only way out of it is time and price and savings. And time and price and savings, you're better off having a stronger dollar than a weaker one.
What about the protectionist rhetoric that we've heard? I mean, we heard Geithner kind of jab at China about devaluing their currency. What kind of implications would a protectionist rhetoric coming out of this administration have on the market?
We've seen protectionist rhetoric. Fortunately, they didn't get carried away with it. Obama asked for Congress got carried away with it, but Obama asked for Congress to reword something and in one of the bills say that, what was it? That we would only do something in terms of international trade agreements when Congress had in there these big Buy America statements that was having Europe and China up in arms.